Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap here on a Tuesday. It is the 5th of March, and another pretty dull day from a broad market perspective as we continue to hang around just below resistance, maybe pushing down a wee bit, but nothing really all that substantial as we are still in the who's going to win this fight mode. So if you don't have a ton of time today, that's going to be kind of the moral of today's story. We, of course, are seeing individual components moving, in the market. Of course, you're seeing Facebook kind of challenge resistance. You saw Google break out. It was definitely interesting and kind of nice to see some of those FANG stocks actually show that they're capable of moving still. So that was, we're still seeing things move, of course, throughout the market. But broadly speaking, we are still having the same fight that we've been, watching unfold for over a week now. And hey, good afternoon, Thiago. Great to see you, my friend. Great to see everybody. Hope everybody is having a great day, both in and out of the market. And it's not quite as boring as it was for the overall market. On the earnings front, pretty light. You've got Cooper Companies, you've got Ross Stores and Urban Outfitters reporting here tonight as far as S&P 500 companies go. And then tomorrow you got Brown-Forman and I want to say Dollar Tree as well. So pretty light, still some retail companies. We did have Target come out with a little bit of an earnings beat. Kohl's came out and had a pretty solid earnings beat. We'll take a peek at their chart here and see what that looked like because they actually were able to break through some resistance beyond that. So pretty decent, slate of earnings, at least across the, for the most part. But it's non-peak earning season, right? And so, there's always somebody, but not a whole lot of somebodies on days like this. So, and good afternoon to you, Patricia. Hey there, Six. Good to see you, my friend. Taking a look at the S&P, basically, this is the day that was. About the only real notable thing to really bring out of today's trading, and I don't know that it's all that notable. And hey, Am, great to see you. Is the last 10 minutes or so of trading. We're on the 15-minute chart on the S&P 500 here. It really happened in the last 7 to 10 minutes, where we did see a lot of profit taking to close us out. We were knocking on the door at resistance, throughout much of the end of the trading day. Nobody apparently was willing to hold overnight and hope that it was going to break through that intraday resistance tomorrow morning. Can't say that I blame them. We did see, some pretty decent selling, and a pretty nice red candle to close us out. But we've seen that a lot lately. I don't know if it's means so much other than it's kind of interesting more than anything else. So, of course, as we go in and look at the daily chart, it basically really dull day. We saw that volatility kind of pop into the market here yesterday. We're right back to the status quo, just hanging around. Very small candle, still closing above the 9 EMA somehow. Every day that passes, sooner or later, it's either going to not close above that 9 EMA or it's going to have to break resistance, But for one more day, we're still holding it here in the S&P 500 as we're still trying to defeat this level of resistance. Really not a lot has changed from yesterday or the day before or much of last week. Basically still having that fight on the S&P 500. Same song and dance over in the NASDAQ as we saw yesterday. 7,200 probably the number to be keeping an eye on in my head over there. But again, we're still trying, and I'm appreciating the efforts. This could be easy to take profits, and I'm not sure if it was Matt or Tim in the halftime report. It said basically just that. It would have been really easy to want to sell yesterday. And I couldn't blame anybody for wanting to sell yesterday or even today or really any day since we've been hanging around resistance. But we're still seeing resilient buyers. And so, we're still not seeing those sell signals. We do see them on short-term time frames, here and there for sure, but still on the daily chart, not seeing them in my mind at least. And good afternoon to you, Cloud. Welcome. Good to have you here. So again, 72, kind of the same number, still closing above the 9 EMA, still seeing that short-term moving average work to the upside. Is getting a little tougher, but it's still doing just that. NASDAQ, our one index, able to technically close positive today at a whopping 0.08%, whereas our RUT, which our big loser, at 0.45. So that's the kind of market and certainly the kind of day that we had here today. Dow Jones, it's very similar, has pushed off of resistance a little bit more. We have a little more room from where we currently sit, at least in my opinion, to our resistance level. If we start to see a little bit of upward movement, this is an interesting, development, I think, here on the Dow Jones. Is maybe we will, maybe we won't. That would probably be up to us individually, but at least I could understand the logic of looking at it from a pullback point of view, not specifically for right this very second or first thing tomorrow morning, but we've worked back towards that, rising 20-day moving average. We have some room from where we are to our level of resistance. So I think I could at least understand the argument to be buying into a pullback if we get those signals. I don't think you can say that we have them here today. At least I couldn't say that for my trading rules, but kind of some room to run. And maybe this is kind of how it will work. Maybe, we'll see the Dow start to take advantage of that little bit of space it has working into resistance and maybe try to carry some of its friends along with us. We'll have to wait and see. Still closing above the rising 20. We have fallen below our short-term 9 EMA. Not a huge deal, but again, all things being equal, if I'm a bull, I want it to be above that 9, right? All things being equal, but holding that 20 simple moving average right now. Nonetheless. And then lastly, over on the RUT, 16, definitely the number. I think that went an easy call. Maybe 72 is pretty easy on the NASDAQ too, I think, where kind of look at, S&P, it's more range 28 to 2820, right? We'll kind of know it when we see the close, I think, is kind of how I'm looking at the S&P. Over on the RUT, I think 16 is very much the number that we're looking at. Of course, we know that was an old resistance level, major breakdown point, kissed it, early last week, and have really, gone sideways ever since. So really, again, as we look at our overall indexes, it's just more of the same. We're consolidating, we're taking that breather. We have all the reasons in the world to take profits from a technical point of view, but we're not really doing it. Yeah, we're seeing some, gradual sliding to the downside in the Russell and things like that, but really, we just are still in that wait and see mode. I still lean towards ultimately it does break. That is, that's still kind of where I'm ultimately leaning. I'm not going to, say it has until it actually has, but if you made me guess, I still think it feels like it wants to with all the resiliency, kind of a little bit of a high base breakout, kind of across the, the board on many of our indexes. So really just more of the same here today as we look at our indexes, no doubt about that. Holding up right around that old support level. And good afternoon, Tanner. Good afternoon, Andy. Good to see you guys. I hope you're doing well. We're starting to kind of slow down. Nice little small candle. I'm actually, and I don't think it's here yet. And again, tomorrow can take this away from me, but I'm really starting to be interested in a potential pullback on the material sector. Personally, I do think that regardless of whether you do or do not agree with that, I think we do want to keep an eye on that 56 marker, that 200, that old swings, resistance level, so whether or not I do decide to move in from a pullback point of view or don't, I think 56 is going to matter. As long as we hold this support level, this old resistance, really, I'm very interested in it. But from a purely technical point of view, it actually could pull back a little bit deeper with our previous swing low really being way down here. And so I expect this area, with the old resistance, our 20-day moving average, I do expect that at least to be a tempting price point. We saw that as the bottom for our candlestick yesterday. And I expect that to at least be tempting to the bulls from a price point of view. And that's what I will be keeping an eye on for the time being. A little bit of a further pullback, I would be open to it. I still think probably the best signal is going to be the break of 56. But and that might that might just be what it takes. But we did see some slowdown here today. Maybe we are going to get pullback. We're finding lots of individual pullback stocks. I think at least, or at least maybe lots is maybe overdoing it. But we're finding interesting pullbacks in the market right now, right? And that's a good thing. Maybe we're going to get a few more of them over in the material sector with the way it's kind of played out so far this week. Over in energy, just kind of doing what energy does. It just, it's every day. I feel good about it. It's been great for cash flow off of that recent break. Unlike so many things that we saw, when they break, they, pretty easily fill up the space between resistance and the next level of resistance. We're really having a hard time getting some momentum going. And I just attribute a lot of that to just that's kind of what the overall market's doing. Maybe I'm right, maybe I'm wrong, but that is how I am looking at it. We are developing kind of an interesting scenario. I'm going to go into an hourly chart here, where we kind of have this, looking at an hourly chart, we've kind of developing a pretty clear top just shy of 67, a little bit of sideways action kind of after that breakout point. I think you could at least make a case that above 67 is another entry, or above this resistance level at approximately 67 is a potential entry point. Whether, I do think that would be a good signal, whether it's a trading signal or not. Again, that's always going to come down to our individual rules. But I do think a break of that would be kind of a breakout within a breakout, right? We watched for that, that break of 65 for quite some time. We broke, we continued to hold, we continued to test from time to time. But beyond that, really not a lot of resistance until 67. So whether it's as a trading signal or not, personally, if we can't actually break that 67 resistance, I'm going to look at it as another bullish signal. And my expectations have really not changed. As long as we hold 65, I expect us to try to work to 69 over on this ETF as that next challenge area. And I do anticipate it being an area to respect from a resistance point of view. But we got to break this short-term 67 resistance before we can even get there, right? But it's holding up well, just not really moving right now. Over in the financials, kind of continued yesterday selling, seeing a little bit of selling in the financials right now. You saw things like Goldman Sachs and Bank of America kind of at major levels of resistance yesterday morning, kind of knocking on the door. But then, of course, we sold off throughout yesterday, and now they're kind of working back from the resistance. So looks like maybe a pullback opportunity. Probably not tomorrow, in my mind. And good to see you, Ilka. Welcome, welcome. We just started going over the sectors here. You didn't miss anything on the indexes, my friend. They basically, at least to my eyes, looked exactly like they looked yesterday. So not a whole lot, across the board here today, my friend. So as far as days to show up a little into it, you picked a good one. So, and welcome and great to see you. Holding this old zone of support at 20-day moving averages, we're kind of acting as intraday support today, may open up the door for some interesting pullbacks in this area as well. I do think we want to be very mindful of that 200. We have breached it on the intraday on 2 separate occasions, kissed it on a third. It has turned into be a little more resistance than maybe I thought it was going to be when we first broke back through here. So exactly, Tanner. So keep an eye on that 200. I don't think it, at least from a broad perspective, obviously individual components may be, in play, but from a broad perspective, I don't see, the pullback being tomorrow, but maybe we get that doji leading us into the later part of the week. You did have Aon PLC. I guess they're in talks to buy Willis Tower Watson, WLTW, one of their rivals. So you saw Aon down big today, WLTW up big today on that news. Kind of a little bit of yin and yang over in the financial ETF. Still a little unsettled. I don't think it's quite ready, for me, but I could easily see a scenario where 2 days from now, maybe it is an appealing area from bullish retracement, from the bullish retracement perspective, especially as long as we're holding above this rising 20 and this old price point. It's not bearish in my mind if we break this, but it's definitely a less bullish signal, in my opinion. So the next couple of days, I think, will be important to me, at least in the financial sector, how it behaves at this 20-day moving average, at this old level of support where we've seen quite a bit of price action, support, resistance, breakout. I think holding that is going to be important. And well, we're right there, right? We can hang out here for a little while, but it's going to have to make up its mind in the not terribly distant future. Industrial's a little bit deeper of a sell-off here today. And I think in a lot of ways that makes some sense because this area was such a high-flying area. I don't think it's done really anything wrong. We did for the first time basically for what seems like forever, but basically since our reversal, did actually cleanly close below the 9 EMA today. Again, you guys know me, that is not a necessarily a tradable bearish signal. I don't think that it is, but it's definitely less bullish, right? So closing below that. Now, realistically, a pullback really all the way back into this old 74 resistance where we saw our most recent breakout would be okay by me. If it wants to have that deeper pullback, I still don't think it's going to get that unless the market has a deeper pullback, but I may be wrong. Wouldn't be the first time, certainly won't be the last. Definitely, regardless of where you find yourself, we are seeing quite a bit of profit taking at that 77 marker that we've worked into. We've really battled a little bit more price movement to the downside here, still rising above our 20. I don't think you can make really much of a strong case other than anything on really short-term time frames to be bearish, at least across the board on the sector. But I don't think you could make a case that tomorrow is the day to buy right back in. Again, best case scenario, we need a day tomorrow to see some buyers step back in on some level, right? Before at least I can even be really thinking about, buying into any of these ETFs with just the price action that we've seen. Technology held up okay here today, still closing above its 9 EMA. Again, nice little area, probably going to need that break of 72 on the NASDAQ to really get running. I like this area. I've not been terribly shy about that. A break of 7,200 on NASDAQ, kind of lining up with a break of 72 on this ETF, I think is one of my favorite potential signals. I think I like discretionary above 112 more, to be honest with you, but I don't have to pick and choose, right? I can love them both equally if I want to. We're still stuck. Again, it really comes down to that. We're still stuck from a broad perspective right below the market, but held up well, closing above the 9 EMA. Really not a lot to see here today over in the technology sector. Over in the staples, again, just another day below that old support, below that old resistance. I'm calling it 55. You may be calling it something different, but I think whoever you are, you're probably looking at this old low and this recent high as that level of resistance. I'm conservative and I'm not sold in this area, so I want to be darn good and sure that it's broke that resistance before I call it a break. So for me, that's at 55, even though technically I think the break would happen a little earlier than that if we do get it. Just again, it just has not been a very appealing area to me. It continues to be very indecisive. Collectively, there are interesting components from both a bullish and a bearish perspective, and I'm perfectly okay with trading individual components, of the staple sector, but I'm not going out of my way to find new trades in the staple sector right now, I guess is a good way to put it. I'm looking at it as kind of developing into a little bit of a sideways range. I still think breaking above 55 is a really good bullish signal. I think I know it's going to be hard to happen. And so I'm not going to hold my breath, at least short term. Just another day, just kind of hanging around over in the utility ETF. Of course, we took out that 57 and we did close, not a particularly strong candle here today, but technically we did close above 57, that all-time resistance level yet again. So how can you make a bearish case? I don't understand how you could. Momentum's on your side, above literally everything except for the intraday highs. And so still appears to me to be a nice bullish area. I think if nothing else, you can't, I can't at least be looking at this as bearish until at the very least, and I'm not saying I would do this the second it happened, until we break this swing low down here in this 56.30 range. I think you could at least make an argument that if we break this support level, resistance held, and we were double topping or triple topping, if we don't get much more movement from here. Now that's probably days away if that's the way that it wants to go, so we can watch that develop. Right now, no real reason to believe that's going to happen, though, at least in my mind. We're just hanging out. We're just above resistance. We are extended, but that doesn't mean we can't keep going up, right? Another nice close above 57, and I don't know how you can interpret that as anything other than bullish, personally. Over in the healthcare sector, continues to be a pretty mixed bag. Saw a little bit of bounce back in some of those healthcare plans, and not all of them. CVS, hit a new 52-week low, and they broke their support level last week and just continually sold and sold and sold. Still, I think for me, I'm very open to really either side of the coin in the healthcare sector. I still think there's really interesting bullish opportunities. I think there are interesting bearish opportunities too. I think the ETF is kind of off limits in my head until we kind of get some clarity on that. We talked, several times now, if those healthcare plans continue to struggle, it really is going to be hard no matter how great, unless literally everything else is great in the sector. And that's probably a little optimistic, right, to hold up. On the ETF itself, though, we are still testing that support. We came right back to that same intraday support today. That was our support level. I do think it's a bearish signal if we break below this. Tradable, I guess that's kind of up to you. I really wouldn't fight somebody who said so. I think probably a better tradable signal would be a break and a retracement, personally. But I will definitely call a break of this support level a bearish signal on the ETF. I don't really know that I'd be bearish on the ETF unless I were to take out this swing low. But I guess we'll see if it breaks that support, and I have to make a call on that side of things. But quite honestly, in my opinion, really hasn't changed as far as dealing with the sector right now. I'm shying away from the ETF as a vehicle, even though I'm perfectly, fond of the ETF as a general rule, as a way to trade the healthcare sector. Just a lot of, things that look great and things that look terrible. And so I'd much rather kind of stock pick things within that area than try to play the overall sector, at least until I feel like I can trust exactly what's going on. Because I wouldn't be surprised if, one day we see huge runs on those healthcare plans because they've been brought down so far and some news moves them. I'm not making a trade that reflects that by any means, but they've been so beat up. You look at a CVS, and while the technicals are absolutely hideous, in my opinion, it has been tremendously beaten. And so, it could be one of those things that good news can get it moving. And so a bearish breakdown on the ETF can immediately be taken away because of that. So I really personally think the way to be looking at the sector right now is focusing on individual components and not the sector ETF. And I'm always very open to that, but usually I'm not really strict on that. But with the healthcare right now, personally, I am very strict with dealing with the healthcare ETF. Over in discretionary, got kind of a nice little bounce on some earnings with Kohl's and Target here today. We've got some that might impact this tomorrow. We're working our way back to at least testing that 112, closing at 111 here today. Like we said earlier, we have Urban, we have Ross, we have, who's the other one I keep forgetting? The Dollar Tree. I shouldn't forget Dollar Tree. So we have some earnings that may impact this, and maybe they can push us through if they're decent earnings. I still, probably my favorite setup on the ETFs right now is a break of 112 on XLY. I think that is a really good signal. I like the room that we have to work with. I've probably not been too shy about that, as we've been watching it develop. Still hasn't happened. Still may very well not ever happen. I think 112 is clearly the resistance level to be keeping an eye out for. I think our support level down here in the form of last week's low is at the very least the line of support that it shouldn't go below. If it goes below this, I could understand bearish arguments and I wouldn't fight them too terribly much, but I don't think you can really make bearish arguments, at least collectively, until that happens. One way or another, we're going to break, here in the not terribly distant future. It might be weeks from now, but one way or another, we're either going to break this resistance or we're going to break support. Right now, I don't think I'd be a huge fan of going bearish on the break of support. But if we go sideways for another 2 weeks, then I would be K-trade. K-trade, either way you want to go, I'm good. So keep an eye on 112, keep an eye on that approximately 110. Not a lot has changed here, but we do have earnings coming out tomorrow that might impact this. It's hard to see them being all so bad that they would make this break support. I guess anything's possible. But if they were all really good, we're very close to resistance, maybe. I like a lot of the stocks in this area personally. And I really do like a break of 112 as a signal. I think that's probably my favorite one that could happen as early as tomorrow. We'll see if it does. I'm not expecting it to by any means. So over in real estate, had a little bit of a bounce back day, carrying over that momentum off of the intraday lows yesterday. Looking a little stronger earlier in the trading day. But again, just another decent day for real estate. I think for the most part, you still have that bullish bias with a side of sideways. Right now, we're still hanging around that same resistance zone. And I don't think you can cleanly say, that it's not a breakout, but it seems like it might need to break above these new highs that are developed to kind of get more traders on board. is kind of the way that it feels to me right now. Still overall bullish, still hasn't done anything wrong. Still, for the most part, while we're seeing a lot of movement, which is a little odd, I still feel that way because these are REITs as a general rule, and these guys don't have a long history of being volatile trading instruments on a day-to-day basis. A little less volatile today, but we're still seeing some pretty good candles. I think right now it's in a sideways range. I still think that it needs time to shake out, at least on the ETF level, before we get a great signal one way or another. I would not want to be bearish on this chart by any means right now, but I think it's kind of let it play itself out a little bit and get a clean break or go sideways for a little longer. It's not a great trading environment in my head, at least in the real estate sector right now, although I have to appreciate the strength that it's brought, right? Because I know that that's just my opinion. The objective truth is it's been very strong, right? So lastly, over in communication services, actually seeing some movement here today, working closer and closer to that 47 marker, which of course is our previous swing resistance and old support and resistance zone. Not a lot of history there, but not a lot of history overall on this ETF. I do believe that is a tradable signal, a break above 47. I don't believe it's going to be able to happen without Facebook and probably both, Google at least showing some price movement, at least one of them. Still 45 at support. I really think this is developing into a K-trade scenario in my head. A break above 47 a buy, a break below 45 a sell. We actually are seeing some movement though. You saw Google. I know you guys took a peek at them in the halftime report. We'll see kind of their end of day, a nice clean break of resistance. Yesterday, nice follow through here today. Will it last? I guess we'll see, but that's really kind of the first really solid signal I think we've seen in a while. You had Facebook run right up into resistance, which, if this breaks resistance, I would call that another bullish signal, and I wouldn't fault anybody for trading it if it fit within their trading system. I would certainly be open to it. We're working right back. We had really 2 nice days after finally getting moving here yesterday, breaking resistance and back above that 200. I don't want to assume it's going to be easy to break that resistance by any stretch of the imagination, but we're actually seeing some movement in these big players. And I know you guys know this, but in case you are unaware, Facebook and Google make up a big percentage of this XLC ETF. So they're just such a huge component of how it's going to move. So interesting to see them kind of get moving here today. Maybe the things can give us a little bit of leadership going. We need something to get us through resistance. And while I'm not personally a believer that it has to be news related, I know I may not be, I may be the only one around here who thinks that. I don't know. I don't think it has to. It just has to. Something has to spark it, though, right? And that can be just buying. That can be certain things breaking resistance, in my opinion, that are prompting other things, kind of like some dominoes, right? Where one, Facebook breaks out and people buy it, then all of a sudden Google's broke out, and all of a sudden we're breaking above 47 on the XLC ETF, and you're seeing tech kind of follow suit. And I can see that scenario where even without news, we're able to push through resistance. Now, would good news help? It wouldn't hurt, right? By no means would it hurt. And we're not there yet. We'll have to wait and see. Right now, we're still kind of in that fighting, we're in fighting mode right now, right? The Bulls are fighting for their life. The Bears are throwing some pretty weak punches as of right now, not scaring people off across the board at resistance. But it only takes one, right? You get punched in the nose. That can be the great equalizer, right? I can't remember what the Rocky line is, but I know there's one that I could use if I knew it. So keep an eye on 45 and 47 on the ETF level. Also, I think following this ETF, you want to keep an eye on Facebook and Google as well, because they are such big contributors to how this thing is going to move. So that's where we find ourselves. Another kind of day of holding our break in the energy sector, pullbacks kind of developing in materials, over in the industrial sector, financial sector, even kind of holding our own in tech. Finally, seeing some movement in the consumer or communication services. We'll see if that one will last. See if Facebook can break that resistance. That would help. So there's where we find ourselves here today after broadly fairly boring day. As we look at the VIX, really not a lot to see here. A fairly boring day in the market usually means not a lot to see over in the VIX, right? And today, certainly no exception. Now, over in the dollar, we did work into that 97. And those of you who I know many, if not all of you, follow the dollar index regularly, we know the 97, the 97.50, the 96, the 96.50, and the 95.50, or the 96, I'm sorry, have been areas that we've seen a lot of movement. And that's exactly what we saw here today, working into that 97 mark, taking a little bit of profits, continuing the overall strength. But now we are at this zone. And those of us who have followed this for a while, we know the battles that we've seen at 97. We know that we've got some, major overhead resistance here at approximately 97.50. Keep an eye on that 97 as we move into the, second part of the week. I still maintain that this is not the environment to be trading this particular chart. I think that you're looking at this overall neutral. Now, if you're intraday playing Forex pairs, that's a much different story. You've been loving the strength of the dollar over the last week, right? If you're like me and really are more looking at this as kind of tracking the dollar, I'm the same old boring dude that I was yesterday. Eventually, it's coming out of this trading range, and I will be very interested. I think that can potentially be a really nice signal. It's just not happened yet, and it probably is not going to happen tomorrow. But definitely more strength, a little bit of selling at 97. Anybody who's been following this, we know that 97 has been something on several occasions. So keep an eye on that. But more strength in the dollar. Have to appreciate the strength that we've seen over the last week or so in the dollar, no doubt. Little bit of a doji developing over in gold, kind of in no man's land here. We're not really at a level of support. We're not at a moving average. We just kind of took a break from the selling, which was probably needed. We saw quite a bit of selling on gold over the last few trading days. Some pretty, bearish signals, in my opinion. A break below 13, a break below the 50 without even an effort. It's certainly hard to interpret that in my mind as bullish. We're below pretty much everything but our rising, our flat 200-day moving average. We do have some support in that 1280 zone, 1275 by 1280 zone. I think as long as that holds, I'm not going to really probably want to be bearish. But it's hard to say for sure, because we can work our way down a little bit more this week, rally back up into 13 or 1290 next week and see some sell signals. And I think you could make a case that looks an awful lot like a Head and Shoulders right now. Again, that's projecting quite a few days in the future. We'll follow it together to see if that's what happens. But right now, I think it's probably not a great area to be trading as a swing trader. On intraday, definitely probably appreciating the movement that we've been seeing. On the swing trader level, I think we're probably waiting for some support to establish and an upward move. And that can give us a signal whether we're looking to potentially buying or selling. We need it to stop going down, start going up. So us buyers can say, well, it looks like we found support. I'm going to buy, or I'm going to buy if it breaks back above 13. If we're looking at it from a bearish point of view, well, I need to know where support is. I want to see it put in that higher low and show a little bit of sell signal. So I think an upward move, really, regardless from a swing trading point of view, what side you might be looking at, I think that's probably what needs to happen for me. And quite honestly, from a swing trading perspective, I'm open to either. I don't think that I'm not opposed to looking at a bearish swing trade on gold. Overall, I'm still bullish on gold, but that doesn't mean I have to be this week, right? So we'll watch that. Certainly a little bit of a doji, a little bit of pressure taken off on the selling side here today. Over in silver, same type of a deal. Little bit of a floor built off of yesterday's low. And I do think we're going to want to keep an eye on this 1525, which is our old support level, and of course our 200-day moving average as well. I think that's kind of the first level of resistance to be keeping an eye out for. I don't really think I would be comfortable buying a break there personally, because we got some room. And again, intraday definitely something that we could work with. But swing trade, I have to worry this rallies up into that 1550 range and gives me the kiss goodbye. Double top, breakdown, working back into that, testing that. That would be a level of resistance at 1550 that would really concern me. So 1550 and 15.25, I personally have as our resistance levels on silver right now. And the big one at $15 as far as support. And those are the areas I'll be keeping an eye on. I don't think there's a trade in the metals right now that I would be comfortable with. But I do think we can have a pretty good idea of where our support and resistance zones are. so we can plan accordingly, whether that's setting up trades, hedges, doing nothing and just watching and waving as it happens, whatever it might be. I think we have a pretty clear area in both the metals markets right now to be keeping an eye out for. Now, our old friends in natural gas, they may make a call tomorrow, may being the operative word, working right back up and towards that resistance. We are right below it. Here today, of course, as we know, we've seen this little double bottom. We saw the break of resistance. We're back above a rising 9. Our 20 is starting to turn over. We are at a resistance level. We've got that 50 sitting right above us here today. What I would love is one more swing to the downside and then one more swing to the upside. And I think that would be a very beautiful trading signal. Will I get that? Well, I don't know. Natural gas has been a little nicer to me lately. For months, it never gave me what I want. But, I've been asking it to be a little more mellow and stay within ranges for a little while, and it's been delivering as of late. I do believe that is a tradable signal above resistance. Whether or not you feel it's worth trading is a much different story, right? You may or may not, and that's ultimately for us all to decide for ourselves. But I would definitely call that a bullish signal. And if I had been looking at getting into natural gas, I wouldn't be opposed to taking a trade as long as we are able to break and close that level of resistance. Now, it hasn't happened yet. Very well may never happen, but we are close enough today that at least, it's not out of the realm of possibility that it could happen as early as tomorrow, right? We are knocking right on that door. So should be interesting regardless to see what happens when we get some signals. If we do, right, still have not got them just yet. I think we have a pretty good idea of where our support is down here at 270 approximately. Our resistance level at this old support level, we've already tested and failed a break or point last week, right at about 290. So maybe above 3 a little more conservatively as a tradable signal. That would get us, through that 50-day moving average as well. So I could see a case above 3. I'm really interested though in natural gas. Now, I would love one more week in this range. I would absolutely love it. We'll see. I can always ask, right? It never hurts to ask. Natural gas usually doesn't give me what I want, but it never hurts me to ask. And then lastly, over in crude, just another day, another not dollar over in crude, as we basically are kind of developing into a nice little sideways range between about $55 and $58. A break of either side, I think, I wouldn't fight anybody if they said a break above 58 to buy signal, a break below 55 to sell signal. The only caveat would be, what do you think of that 59? If that scares you, a break of 58 probably is a lot less appealing. If that doesn't concern you, I think you probably are realistically not looking at resistance, beyond that 59 until we work back into that, high 61s, low 62 range. And even then, probably more accurately would just be 62.50 at, in my head at least, at the 200-day moving average. So short term, I think there is room to run if we do break to the upside. How I feel about that 59 will probably impact what I would be willing to do if and when we do break through 58. But I still believe there is room. Do I believe in it long term? Not necessarily, but I don't have to, right? I can look at it from a short term point of view. And there's nothing at all wrong with that. Again, on the other side of it, a break of 55, and especially the longer we stay in this range, a break of 55, I do believe we could easily call a sell signal. That would be taking out support. That would be failing at resistance. That would be breaking below moving averages. Depending on when it happened, we could easily see some turnover in those short-term moving averages. So K-Trade maybe developing in the energy sector. I think you could make a similar case, although a much more difficult to pull off case in natural gas, that if it breaks support, it's an opportunity to sell, or resistance, it's an opportunity to buy. I think we could make the case. I think it'd be easier to work with crude, knowing how natural gas operates, but maybe a K-Trade developing here. And anybody who is unfamiliar with our K-Trade, all it basically is sooner or later we're going to come out of this range, right? Sooner or later we're either going to break support, giving us a selling signal, or we're going to break above resistance, giving us a buy signal, and I'm basically open either way. I'm comfortable going long and comfortable going short. Just whichever way wants to break is cool with me. And that's all that I mean when I talk about a K-Trade. I know many of you guys are familiar with the K-Trade, but not everybody, and want everybody to be comfortable with that. So, ladies and gentlemen, that's where we find ourselves after a fairly uneventful day broadly speaking, again, in the market, any day we could make up our mind, right? We're not that far away from that resistance. You don't know what the spark is going to be that either pushes us down or breaks us through that resistance. Whatever it is, it hasn't happened yet. So we're still hanging around, doing the fight at resistance, maybe slowly being pushed down. But even if you look at it, and really quick, let's just pop into the S&P 500 and go look at it on, let's say, a 30-minute time frame. Even when we kind of scrunch down the time frame, we're really not getting a lot of sell signals. Now you could say that, well, we did break a swing low, and we did, right? We did, but I don't know that that's a tradable signal necessarily. So we're still just really, really back and forth. We're just very undecided at resistance. And well, this is a good lesson. If this is your first time watching this fight, it's a good lesson. These fights can last a while, right? Because again, no one wants to be the first to buy at resistance. I really like a break because just in my head, the way I see it playing out is just dominoes fall. One breaks, then another breaks, then ETFs are breaking, individual stocks are breaking, and I can easily see that creating a nice bullish run in my head. I am very interested in a bullish breakout here. With all that said, I'm not going to be the first one to buy. I need somebody else to be the first one to buy. You guys feel the same way. Other bulls feel the same way. And so until something for some reason or another pushes us through, whether it's just get it going on a few stocks and it just carries over, we see some news, just going to have to wait it out and watch it develop. Still don't think you can make a strong bearish case other than, well, we are at major resistance. And I can understand that, but that's not enough to make a trade. That's enough to not do anything. That's enough to sit out. Absolutely. But I don't think just being at resistance is reason to go bearish personally. So ladies and gentlemen, I'll let you get out of here. But as always, it is fantastic to see each and every one of you. Thank you so much for joining me. It's always my pleasure. I appreciate you guys hanging out with me, going through the process. It's definitely more fun to do it with you guys than do it on my own. So thank you so much for joining me. If you are new around here, be sure to subscribe to the channel and hit that notification bell. Don't be afraid if you have any comments to let us know in the comments below. Always happy to see what you guys are up to. And certainly appreciate that. If you enjoyed the market recap, it's always helpful and appreciated. If you do, give it a thumbs up just to let us know that it's helpful. And probably as importantly, let YouTube know that it's helpful as well. That really helps get the message out. So thank you in advance for that. Ladies and gentlemen, I will let you get out of here. For pro members, enjoy the coaches show here tonight. If you're not a pro member, hop on over to Tackle Trading. Try out a 15-day free trial. You probably will have fun for those 15 days. Maybe you'll stick around. Definitely give it a shot. We'd love to have you. So easy to do. Head on over. I'll see you guys all same time and channel here tomorrow afternoon. So thanks as always, guys. Thank you for joining me. You guys have a fantastic afternoon and fantastic evening, and I'll see you tomorrow. Thanks, everybody.